You're listening to Barry Burnett on Investing Insights with Barry Burnett on Talk Radio 790 KABC. We're talking with our spectacular guest, Aaron DesMarais of Augusta Financial. Aaron, I'm so glad to have you on this show.
I'm thrilled to be here tonight, Barry. It's a pleasure.
Well, the pleasure is mine. We've known each other for a long, long time. Aaron, as a mortgage lender, we met in 1989, didn't we?
I came knocking on your door in 1989, yes.
And we've done a lot of business since then. You've handled a remarkable and extraordinary record for me. You do loans for residences, condos, duplexes, triplexes, fourplexes. You deal with that kind of market, right?
Residential real estate, 1 to 4 units is what we specialize in.
And you regularly work with investors. You work with first-time home buyers and refinances, of course, but you also work with investors, correct?
Of course.
You have a ridiculous track record with me. I've owned 3 mortgage companies and never got anybody to do better than 80% of the loan conclusions. You've closed 703 out of 703 that you told me that you could do since 1989. You're still batting an absolute 1,000.
Well, I work for a great company, Barry.
Yeah.
It helps a lot to have the backing that I have from my company.
Well, Augusta Financial is very fortunate to have you, and they're a major direct lender. And one of the things I like about you, though, is you absolutely mother hen all the clients. You tell them what you tell them what you told them, you remind them again, and then you gather up the information.
Well, it's a very challenging industry that I'm in. It's gotten a lot more restrictive since 2008, although guidelines are starting to relax again. So we definitely have to be on our game to be able to get the loans done.
You're kidding. Things have changed since the mirror fogging days?
Actually, they are getting a little bit easier to do loans now. It's the government, a very strong reaction from the 2008 mortgage meltdown, and the pendulum swung pretty far to that side of it. It is definitely starting to lighten up a little bit, and the guidelines are starting to be a little bit less restrictive, and we're definitely being able to accommodate more buyers than we could, say, a year ago.
More buyers and refinances.
Absolutely.
And equity has changed considerably, hasn't it? We had just 2 years ago, we had a situation where probably 25% of the dwellings in the marketplace and the small investors' packages were actually underwater, where they owed more money than they were worth. And that's not the case now, is it?
Well, the statistics bear out that properties have been increasing anywhere from 10 to 20% in our industry, particularly in California. The latest statistic that just came out shows California is appreciating from year to year at this moment at about 10.3%. So a lot of those underwater properties are definitely in a lendable position now.
So if you've got a property that's worth $500,000 that was worth $400,000 last year, and you owed $450 because you borrowed originally and then refinanced, well, now you've probably got enough equity to fix yourself, right?
You are definitely in a much better position than you were even 2 years ago.
And assuming that they've handled their credit satisfactorily and can qualify for a loan, you can fix things pretty easily, albeit a very arduous management program through making sure somebody gets through the loan process, correct?
Absolutely.
Okay, so how many loans can a small investor have on single-family homes or duplexes or triplexes or fourplexes through a direct lender?
Up to 10 properties, which should accommodate most investors. Now, the guidelines change from 1 to 4 to 5 to 10, but you can actually own you can own as many as you want. You can have as many as 10 home loans and still get a Fannie Freddie product.
Okay, Fannie Freddie, that's nice buzzword. What is it?
Well, Fannie and Freddie are originally what we call GSEs, government-sponsored enterprises, designed by the government. Fannie in 1938, Freddie in 1970. What these companies, they're large corporations.
Stands for Federal National Mortgage Administration, which is a combination government and private entity.
Correct.
And then Federal National Home Loan Corporation.
Correct.
And they buy big bulk packages of loans and then they shove them off to Wall Street and securitize them, correct?
That's exactly what they do.
Okay, so investors who are going to call up and ask for either a refinance or to buy more properties can call Aaron DesMarais at Augusta Financial, and the number is 818-399-1571. Is that correct?
Correct, Barry.
Okay, so that reaches Aaron DesMarais directly.
That's my cell phone. You can't get any more direct than that.
No, you can't. And the track record is still obscenely excellent. And it's 818-399-1571. Or if you can't remember it because you're driving or you haven't got a pencil handy, you can always go at barryburnett.net, barryburnett.net, and we'll get you to Aaron DesMarais immediately. And why would they want to call you right now? What's going on in the market?
Well, rates are at near historic lows. Guidelines have relaxed a little bit. Loan to values have gotten a little bit more reasonable. It's the market is definitely moving back to where it's a little bit more friendly loan environment. And any investor that got turned back a year or two ago should revisit perhaps buying property again today.
Okay,
you can't get a better investment than real estate.
No, you can't. And some of us got our ears pinned back because the laws changed so dramatically. It's like the pendulum swung at a rocket speed, and now it's swinging back slowly, but it's swinging back. So the Dodd-Franks Act made some of us unlendable, and now we've got some stated income products for investors. Do you have stated income products?
Well, what we have is a bank statement program that acts as a stated income loan. It would be 12 months bank statements. We average it out over the last 12 months, and that is equated as income as opposed to having tax returns and pay stubs. So
wait, I just heard Cuba Gooding shout, "Show me the money!" Okay,
that's what it is.
All right, show me the money. It's proof. So it's not fogging a mirror. It's actual proof. You show them, and then you can go get the loan, right?
Correct.
Okay, assuming that they have good credit.
Well, to do any type of a Fannie Freddie loan, you have to have at least a 620 FICO score. When we were talking earlier about the 5 to 10 units, you're going to have a 720 FICO score for that. And for the bank statement program, you have to have at least a 680 FICO score.
Okay, FICO is Fair Isaacs Credit Organization.
Correct.
And Fair Isaacs is the penultimate that Dave was talking about, and that you and your company regards because that's the matrix that rates credit.
Every loan generated that has to be sold to Fannie or Freddie, which is most lenders today, require a FICO score. And a FICO score dictates the quality of the credit, the type of interest rate you can get, and the type of down payment.
So they manage their risk, and the investor manages their own risk. Our listeners are managing their risk by going now, calling you, and getting refinanced into a better position because they're no longer upside down, or at least strongly likely that they can solve those upside down problems. And many of them find that they may just want to reposition their loans. Maybe it's just time to pull a little more cash out for another investment.
Absolutely. Doing a cash out refinance on one property to get a down payment for another property is a very wise, astute thing to do today.
Excellent. Well, we want wisdom because it's the intent of this show, Investing Insights with Barry Burnett on Talk Radio 790 KABC, to make your portfolio stronger, safer, smarter.